think about what you're investing in, which leads on nicely to a question sent in. I said we'd do some of these, so it's sent in by one of the followers of the show, a subscriber to CRUX Investor. How can a retail investor best validate the claims of a company as it relates to their assets? And I guess that touches upon some of the things you just said, but it also, I think what you just said is a new thought and quite a good one. But how would a retail investor with limited access to research go and validate what the company has told them?
Yeah, so there's again, that's a challenge, right? Retail investor can't go out and hire an engineering consulting firm to evaluate, that an institution or a strategic investor could do. So I would say there's two things to do. One is, in Canada anyways, you get access to the full 43-101 report. On the ASX, you get the press release that's attached to the, when they complete the report, but you can't actually get the full report. But you do get a bunch of the information in the press release. Look at who did the work. Again, I think we've talked about this on another call, but there's two groups of engineers. There's people who do studies that get hired by junior mining companies and to come up with good numbers that someone can sign off on, but they've actually never built anything or haven't built anything in 30 years. And so, put a big question mark around the quality of those estimates. And then there's the engineering firms that actually not just do studies, but actually build things and have built things within the past decade. So, in terms of the quality of the estimate, you're going to get a much better estimate from those group of companies. Again, if it's a mining company that's serious about actually advancing their project, they're not going to use, Joe Engineering Co. or Jane Engineering Co. They're going to go with the person who has the reputation that when they go to pitch the project to joint venture partners and other larger mining companies, those companies know they can rely on those numbers. The second thing to do is just try and find projects that have been built within the last, again, as close as possible, within 5 years or 10 years. Try and find, if it's, using nickel example, look at ferronickel projects that have been built in the last few years. Look at HPAL projects that have been built in the first few years. And again, it doesn't take a lot of, and maybe this is something we can put together in the next few weeks, is just some historical benchmarks that just say, okay, look at the capital cost, look at, how many tons of ore were they going to process, how many tons of metal were they going to produce, what's the operating cost, what's the capital cost, and again, 7 or 8, it's not, you don't need to go through 20 numbers, it's just pulling those 7 or 8 numbers and looking at those 7 or 8 numbers for some historical projects, and just to see sort of, okay, how in line are they, and if they're significantly different and they haven't explained why they're significantly better, then there's probably a good chance that they're actually not going to be significantly better. So that's what I do when I'm looking at in other projects, and I've done in a corporate development role. I mean, that's what so I'd encourage people to definitely do that.